I have with me Pravin and Ranganathan, CEO and CFO at Infosys. Thank you, gentlemen, for speaking to BloombergQuint.
Thank you.
My first question is, how has the traditional business performed? Have you started to see the decline now? And what about the non-legacy business? How much will they contribute to FY18 and the digital business as well?
See, overall, I mean, there's nothing like a traditional legacy and other things. So, what we have really tried to call out is new services and new software. Over the last 2 years, we have invested in newer technologies, newer areas, both on the services and software side,
Right.
which we believe will be the future 3 to 5 years down the line. So, starting this quarter, we have started calling that out separately.
Okay.
So, today, with both new services and new software, it is roughly 10% of our revenues. And if you look back from last 2 years, Infosys has incrementally added about $2 billion in revenue,
Right.
and roughly about 1 billion comes from this new software and new services. So that is the area where we would focus on, because
Right.
that would be the future.
Okay. And what about hiring in the US? How many people are you looking to employ and how many visas you have applied for? And what are the costs?
We have made a commitment to hire about 10,000 people over the next 18-24 months. And within both Indiana and North Carolina, the two initial hubs that we have created, and where we have again committed to about 2,000 people over 5 years. So this year, we are looking at maybe about 500 people in Indiana and similar numbers in North Carolina. We are also looking at identifying a couple of more hubs. These will be innovation and technology hubs. They will act as development centers, they will act as training centers, and we'll also create agile workspaces here where we can showcase our technology and co-create with both our partners and clients.
Right, right. Ranga, with wage hikes and employment cost and with currency volatility, do you think you'll be able to hold on to the margins?
I think if you look at last 2 years, our margins were steady at 24.7 and 25 range, and last year we exited also at around 24.7. This year, despite that, we gave a lower guidance, right, 23 to 25, and the reason we gave is primarily three factors. One, of course, is the rupee has appreciated 3.5% already, so that was one factor. And the second one is the investments that we need to make in the US talent model was the second factor. Third, of course, the regular comp hikes and so on. So these three factors we took into account in giving the 23 to 25. Of course, the first quarter has been at 24.1, same as last year's same quarter. At the same time, this quarter was helped by really the utilization and the pricing improvements and so on and so forth. But we have also said that we have the compensation increases coming up, and as well as the US talent ramp up. So these are the ones we have already taken into account while giving the 23 to 25.
Right. And one of the highlights for this year's AGM as well as, most of the shareholders were asking, what about our buybacks and what about dividends?
Yeah.
And you have set aside 13,000 crores for that. Any update on that? When can we get in? What's going to happen next?
Yeah, I think as you rightly pointed out, the company announced in April a very specific capital allocation policy, which outlined how much of future cash will be returned to shareholders, how much of the balance sheet cash will be returned to the shareholders. And we are kind of working out, as we have a very large global investor base and we are listed in multiple jurisdictions. Any distribution mechanism requires multiple regulatory approvals, and we are committed to execute this capital allocation policy in a timely manner, and we are working on getting the necessary approvals.
And what about the BFS sector? How are the client spending changing from run the business to to own the business?
I think BSI, as we outlined earlier, I think we have to see how much of the positive energy that has been there in the last couple of quarters, primarily because of the reduced regulatory burden on them or on the increased interest rates. How much of that will translate into the IT budget at the ground level? Typically, we see 1 or 2 quarters of lag there. Typically, from the time the buoyancy and the mood lifts up to translating into IT budgets, always there is some lag. So we are hopeful that in the H2, we begin to see some of those, the spending trends.
And
They
lastly,
become more visible in the second half.
right, right. And lastly, what are the key sectors you think that you wanna see an uptake in the coming 2 quarters?
We remain positive about BFSI segment. We have continue to see good progress both in telecom and utilities space. In manufacturing, barring high tech, we will see some good uptick. Only areas where we are seeing some softness we expect through year is high tech in manufacturing, and perhaps energy will continue to remain soft. But barring that, most of them will have moderate or decent growth in the coming year.
Thank you, gentlemen, for
Thank you.
speaking to BloombergQuint.
Thank you.